Good afternoon, everyone. I have Siddharth with me from Mirae Mutual Fund. He heads the passive investments, uh, and he's been with Mirae since 2020. Prior to that, he was with NSC indices, National Stock Exchange indices, and so that's where his uh, interest and his work on the indices goes back to over a decade. And on his last visit to Pune, we had a discussion on factor-based investing because as a policy, Polo Wealth, we do have passive investments and factor-based investments as an important part of most of the portfolio construction that we've been doing. Uh, and That's where I thought, let me get Siddharth on board and help us understanding the index. So Siddharth, thanks a lot for joining. And if we can just start with the simplest of initial uh, explanation of what is index. If you can just probably start with that, and then we can go ahead.
Sure. Thank you, Vinay, for having me here. Uh, when it comes to index is nothing but a rule-based method to create and track a portfolio. It is as simple as that. So, for example, what is Nifty 50? Nifty 50 is a rule-based method to identify 50 largest companies listed on National Stock Exchange and then track it on a regular basis and also rebalance it, reassess it. Because one thing which we don't realize or and don't give importance to is how quickly the index also evolves. Just look at the top stock. I think probably in Indian equity indices you might not notice because large companies have remained large. But look at, for example, a Nasdaq 100, how
Yeah.
quickly Netflix has grown, how quickly Tesla has grown, how quickly Nvidia has grown, and are
Yeah.
now the top constituents of Nasdaq 100, right? And this index can be based on anything. It can track equity, it can track debt, it can track commodities. You have GSCI index, which is very popular for tracking commodities. It can track multiple assets at one go. Just that it has to be rule based, and based on rules, it has to be created and reassessed at a defined interval. And then just one more point which I like to add, that it can be as simple as you want and it can be as complicated as you want. So that's the best thing with index investments. When it comes to simple products, you have largest product in the world, S&P 500 ETF, Spider ETF. In India, you have Nifty 50 ETF. When it comes to the most complex of products globally, we have inverse and leverage ETF, we have covered call ETF, we have buffer ETF, we have a crazy amount of things which even in India does not happen on the AIF side. So it is
So
purely
these are all
dependent.
not in India. These are all in developed markets, right?
These are all in fact, you'll be surprised to know that before having India Nifty 50 ETF in Korea, we had an inverse ETF and a leverage ETF. Inverse ETF is if Nifty goes down by 10%, it will give you 10% positive return. And if Nifty is up by 10%, it will give you a negative return. So it's all these are phenomenal uh, tools which can be used in different clients' portfolio. Abhi India is not that evolved in terms of passive investment. I hope it does. For example, the fastest growing segment globally right now is active ETF. It comes in semi-transparent and transparent form. So in terms of innovation investment method, I think it's a very fastly evolving field. Yeah. So I think that's all about
Yeah.
index.
Wow. Yeah. I think I could probably hear passion in your voice when we when we started discussing index. So okay. You spoke about reassessment and rebalancing.
Yeah.
I think that comes across in a lot of client discussion with me. So is there, the reassessment and rebalancing, is it common, as in the duration is common, or typically how and when are the, stocks in the index reassessed and
Mm.
rebalanced?
So it depends. Actually, it depends from the category of benchmark you are looking at. For example, typically, if you look on market-based indices, they are rebalanced on a or reconstituted on a semi-annual basis. In fact, S&P 500 is reconstituted on a annual basis only because the changes and churns are typically not too many. For example, within Nifty 50, Nifty 50 is reconstituted on a semi-annual basis in the month of March and September because movement of what become top 50 blue chip company and what does not stops being a top 50 blue chip company does not need to be assessed every month,
Yeah.
right? But when it comes to, let's say, a momentum or an alpha based index, I think we'll talk about it in more detail. When it comes to any quant based index, it
Hmm.
needs to be reviewed on a more frequent interval because the underlying market dynamics might have changed. The sole reason due to which you selected the stock to be part of the index might have faded away. So you need
Right.
a replacement. So it depends basically whether frequency should be more so that
Hmm.
your index remains true to the label, or is it okay with a 6 monthly or annual rebalancing? Because when I it leads to churn in the portfolio, and higher the churn, higher the tracking error and tracking difference typically in any index. So it is
Okay.
avoided, but it is then kept on a frequent basis if necessary.
Right. No, so now let's come on to the topic of discussion that we wanted to discuss. So, what are factor-based funds? And so factor-based, quant-based. What are these funds? And and where did they start from? So, I mean, have they been in the developed markets for quite some time, and India is replicating them now, or is it, something that has started lately?
Mhm.
So, can you just explain us that?
Yeah, I think see factor-based investment थोड़ा name has been थोड़ा complicate कर दिया. I think it's a marketing gimmick to be
Hmm.
honest. Smart beta and factor investment, but this has been done since ages. I think if I ask people who are here, or if you ask anyone, everyone has own style of investment.
Huh.
Probably if I will invest, since I'm a risk averse investor, I
Huh.
typically will pick companies which are profitable, which are having less leverage, which are
Hmm.
having more earning stability, has some history. So ultimately, my style of investment is quality centric, right? There will be a lot of investors who are thoda sa risk taking, which will be investing in trend based
Huh.
stocks, right? Whichever stock is giving return, you
Yeah.
invest in it. That is nothing but a momentum investing. Then we
Huh.
have all read about Warren Buffett and so many value investors, Benjamin Graham talking about that lower price multiples are best companies to hold, right? That is
Huh.
value based investing. Then you typically come and say that no, nothing, whichever is more stable
Hmm.
journey is better because it tends to fall less. And if you fall less, over a period of time, that turns into alpha. That is nothing but a low volatility investment. So, what are these factors? These factors have been used by investors, these factors have been used by active fund managers, and they have generated some sort of risk and return profile which is relatively consistent, right?
So,
Uh,
so can I add? So they are mathematical formulas and used by fund managers, and in active funds where there's a fund manager, they ideally use their emotional intelligence to use this, whereas factor based funds are using some of these factors without the emotion biasness of the fund manager. Is Can it be put in
Absolutely. So
correct?
what has happened is that what these index providers, especially MSCI, realize that we can use these factors or we can target these factors. So instead of selecting stocks based on market cap, like Nifty 50 does or S&P 500 does, why not we pick stocks and weigh stocks also based on these factors? Let's say pick stocks based on quality and assign
Hmm.
weightages also based on quality and market cap. We pick up stocks based on momentum and assign weightage and also based on momentum and market cap. So this way, factor-based indexes were constructed, as you rightly mentioned. They are based on set rules. There is
Yeah.
no emotional question, right? If you end up selecting a stock A and you do not agree to it 1 month down the line, the index will continue to have it till it is meeting the rule. And also, Vinay, that you have decided a rule. For example, tomorrow you may say that Siddharth, I don't agree, return on equity is a better than return on capital employed.
Huh.
Right. But you have done enough regression analysis, enough backtesting to realize that my index will pick up companies based on return on equity, debt equity ratio, EPS variability, etc. And that is the method which I'll continue following.
Yeah. Okay. So now, can lately, we've been hearing multiple of these indices coming together.
Correct.
Momentum आया, momentum along with alpha आया,
Hmm.
or using quality index
Hmm.
with momentum. How does this help? Now, isn't it complicating too much for the investors, or yeah,
No,
so or
so
or, or
see,
is it needed for the results?
I think yes, there are too many funds. There are no doubt about it. More than 220 index fund, 220, 30 ETFs there are. So problems are several. But see, whenever you buy stock, you do some research, right?
Yeah,
You don't buy it because your a friend said कि नहीं यार ये stock खरीद लो, this is very good. I hope you do some research. So everyone does
yeah,
some research. So that amount of research is also required when you are moving away from Nifty 50.
yeah,
As soon as you move away from basic products, large cap,
right.
mid cap, you have
Huh,
to invest time to pick up a good theme or a good sector or a good smart beta,
right.
right? Because each of them offer and cater to different audience and have different risk profiles. So I'll take a couple of minutes if that's okay. So for example, in smart beta products, not only you're selecting stocks based on factors. And मैं momentum का example लूंगा because I think momentum everyone understands. So let's say there's a momentum or alpha based product. So you're picking stocks which are generating alpha or momentum. But you assign weightage also which is in a way linked to alpha or momentum score. Now, now
Right.
anything can be drafted. For example, you can assign weightages based on only momentum slash alpha score. So जहाँ पे whichever stock is doing better will get the highest weightage, or you say no, I'll assign it based on a combination of market cap and momentum alpha score. So what will happen is let's take an example. Let's say right now if you create a portfolio of momentum alpha, you end up selecting HDFC Bank, you end up selecting let's say SBI, and you end up selecting Canara Bank. I'm just taking three bank as an example. Let's say I calculate the alpha score and Canara Bank is doing the best and HDFC is doing the worst and SBI is doing somewhere in the middle. If you do pure play free float market cap, which is typically an investment style of Nifty 500 or Nifty 50 or S&P, कि जो ज़्यादा बड़ा है उसमें ज़्यादा allocation दो. Your weightage will always be where? Always towards SGFC,
Right.
right? If you do it purely based on factor, it will always be, in this case, Canara Bank, because Canara is doing better. And if you do
Right.
a combination, probably either of SBI or HDFC will have a higher weightage, because then you're
Hmm.
tilting. HDFC का weight थोड़ा reduce हो जाएगा, SBI और Canara का थोड़ा बढ़ जाएगा. So why I'm telling you this, because I think everyone understands investment right now. So stock selection जितना important है, उतना ही important stock weighing भी है. You might have selected the right stocks, but if you are punting higher weightage on stocks which are not so good, your returns will not be better, right? You need to
Correct.
invest higher amount in high conviction stocks. So यहाँ पे
Hmm.
भी काफी difference है. For example, that's the difference between alpha and momentum.
Hmm.
Alpha still takes combination of market cap and momentum score. So यहाँ पे इस केस में SBI और HDFC का weightage higher रहेगा rather than Canara. But alpha is purely based on alpha score. So Canara will be higher. If there's some other Bajaj Finance का ज़्यादा आता है तो Bajaj Finance will be higher. Now, also in terms of combinations on
If I
everything,
can, if
yeah,
I just want to, add that with a example that we actually faced with a lot of clients for last, you know, 10, 15 years, then, just relating to there, because, 15 years back, probably equity investing was not that popular, uh, from long term. It was more termed as, trading. It was more understood as trading. And we realized that because at that time, people with, let's say, net worth of 100 would start with 0.25 as an investment. अब वो 0.25 आपका, even with a phenomenal return, it didn't really matter much because हाँ ठीक है, at a portfolio level or at a net worth level, there were returns. So if the weightage wasn't that good, it didn't make much of a difference. From there, we've come to, where equity as a weightage is important. And now we're talking about weightage of the right stocks or the right sectors is important to make sure that the portfolio returns, correlate. So yes, so, I just thought I'll give you that example because a lot of clients, we've discussed this in the past where, if the allocation is not enough, then, we're not going to generate that kind of return as well. So yeah, please go ahead.
absolutely. And finally, so see, there are multiple factors. People should, जो भी factor based product में invest कर रहा है, he should understand, and it's very simple. How will low vol behave? Name itself says it will be more stable, especially during bad markets. How will quality behave? More sturdy. Momentum, return chasing. Value typically works better जब market is in a broad market recovery. Has done phenomenally well post COVID and global financial crisis के बाद. But when it comes to, like you mentioned, that now there are additions of portfolios, multiple factors also, etc., then it removes away that cyclicality. Now that can be beneficial also, and that can be bad also. It depends on. It is hence very important कि investor goes through the method, which is hardly a page long, and
Hmm.
understand if this is something which is adding on to my portfolio, and just not invest because there is right now sort of a cattle race to launch the funds, and also lot of herd mentality to invest in momentum and other factor based funds.
Right. Can we just share some back-tested data that you might have, or I mean, if you're allowed to share some of the data of these various factors and how they have done against the major indices for, for us to just view, and if you can want to just highlight any of them.
Sure. So I have, let me just quickly. Yeah, so I think this is one example which we have just jotted down, and this is August ended data.
Yeah.
No, this is actually calendar year, so December calendar दिखा रहा है. So what you can see is in good times how alpha has behaved. Alpha and momentum is synonymous in terms of what it tries to do. So in good years, let's say 2023, 57%, 21, 56%, 2017 market was good, 62%. So whenever markets are doing well, it does really well. Okay.
Yeah.
Uh, Whereas low vol, on the other side, let's look at 2015 when Nifty 200 was almost down by 80 basis point negative. It was up by almost 10%. In for example 2018 when market was flattish, it was up by 7.4%. In 2011 when markets are down by 26%, it was down only by 12%. So
Yeah.
low vol is something which protects your typically see no strategy works 100% of time. So
Hmm.
investor needs to be cautious about that also. But
Hmm.
low vol is something which provides that stability, whereas alpha is something which tries to capture the trend. Now typically क्या होता है कि people believe that alpha becomes very high risk high reward, and that is true also. But thing is, we are lucky to be in a country like India, which is in a sort of in an uptrending zone since last 15, 16 years, अगर आप COVID and GFC हटा दें, if you remove COVID and global financial crisis, there are hardly any sustained period of depression in terms of stock prices. So Alpha has continued to do well if people are willing to absorb the black swan events. For
Yeah.
example, on, if I remember the date correctly, June 4th, the elections results are out in June 4th, right?
Yes,
Yeah.
yes, yes,
If you
yes,
if
yes.
you if you look at those sorts of event, Alpha has corrected and continue to correct more in those black swan events. But if you are able to withstand that volatility, Alpha is a good product. Low vol, on the contrary, I think it's a beautiful product for anyone who wants less risk. Same as quality. Quality will also do well when markets are in a sideways movement or in a correction zone. Very quickly, this is a long term performance versus Nifty 200. This is August ending data, so not too old. So if you're looking 10-year, Nifty 200 has given almost 15% return, 14.8 to be precise. Alpha has almost outperformed it by 10%, which
Yeah,
is significant. But I always like to talk about low vol. मैं start में बोला I'm a bit of a risk averse investor. But look
yeah,
at how beautiful low vol is. It has 2% lower volatility. It's there in a different slide, but it
yeah,
has outperformed the market by 1%. Now, if you do not want to take market risk, मतलब कम लेना है, even right now, I think it's the perfect time if you are even skeptical of large cap from a valuation point of view, but you are not finding any avenues to park your money because right, nothing is as attractive as equity right now.
right.
Lowell is a phenomenal product because returns reasonable generate करके दे रहा है with a lower risk. So I think that is why smart beta is getting so popular, that it allows you to target a certain risk and return profile. For example, I think for a lot of investors, I have a lot of investment on the active side, but those active funds are very quality centric,
Yeah,
right? मतलब typically, my funds are tip of fund managers which are quality oriented, uh, and growth oriented. उन्होंने बहुत अच्छा नहीं किया in last 2-3 years.
correct.
So if I want to diversify, I'll simply add Nifty 200 Alpha 30, because
Yes,
this is a flavor which is missing in my portfolio, etc. Right? But if vice versa can happen with someone, that I have taken a lot of stocks which are all very volatile, defense or capital goods se bhara hua hai. How do I diversify? And then you can simply use Nifty 100 low vol 30 ETF and sorts of uh, provide some risk aversion to your portfolio. So these are very beautiful building blocks, and you can use it whichever way you want.
correct. So, right from, and I think information is amazing, because today it is really widespread, and we are blessed to have investors who have access to information, and because you know there was a point of time where there was equity and active funds were outperforming the indices regularly, uh, and then Vanguard style of investing did come up in Indian investors discussion, where index investing was discussed, and people realized that not all active funds have been outperforming the indices, and now coming up with these factor based or these smart beta products, because now we're talking about outperforming these without the emotional biases of the fund manager. So yes, I think our markets are really moving forward. Just to put it that in context, what is your thought that is this a trend which will continue? Of course, there is enough data, because active funds, there are a lot of active funds which also outperform indices over long term. But right mix of passive and factor based and indices, of how important it is going to be going forward in portfolio construction of investors now.
So see, I think smart beta as an investment product suit will gain more traction. It will become more and more popular because SEBI has sort of stopped a lot of product innovation from happening on the active side. You can have only one large cap fund, one mid cap fund, one small cap, one multi cap, one flexi cap, and in all those different sort of permutation and combinations you can try on the passive side. Within large cap, I can have one low vol, one alpha, one quality. So I can slice and dice and give that options to investors, right? And investors can plug and play that in their portfolio. But I'll say that ultimately when I nothing can replace Nifty 50, mid cap 150, multi cap Nifty 500 approach, which are also very powerful core portfolios, right? I think uh, while I have backtested these indices and I've launched these indices from NSE 8, 9 years back, and they have in a way behaved the way they are supposed to behave, especially low vol, momentum, etc. The utility and the necessity of simple products is also there. So it should not happen that people should rush and allocate their core majority of their portfolio in momentum or alpha just because they have generated return, because probably you have not seen the other cycle also,
Correct.
right? Probably you have not gone through the black swan event. So it's important to first use it these in their satellite portfolio, थोड़ा कम allocation करके keep using Nifty 50 active funds as major core allocation, etc. And once you understand how they are behaving and impacting your overall portfolio, then only add it. I think so. We'll see more products, more inflows, but I think then people will also start seeing similar sort of inflows in basic products also, like mid cap 150. I'm surprised that Smart Beta has seen more inflows than a mid cap 150 ETF has, where if you look at the data, a lot of mid cap funds have underperformed the benchmark itself. So we are living in those times when people right now are looking for trends more than core allocations also.
Right, right. So yes, also mixing and having the right mix in the portfolio with, let's say, momentum plus low vol or alpha along with quality, is as important when they are mixed with, mid cap. So the momentum has been used with mid cap,
Yeah.
small cap, of course, Nifty 200. So
Hmm.
yes, so that right mix is as important, and I completely agree, because we've been looking at the trend for last couple of years since the time these funds have become popular, and of course we've been on the right side of it because the portfolios also have been doing fairly good. So I think okay, one last question that did come up in one of the discussion where what about when these you spoke about rebalancing of these portfolios. Now, when there is mid cap and the small cap में अगर हम rebalance करते हैं, and
Yeah.
if this fund size really grow, then
Hmm.
will it affect the entry and exit of the stocks? Because sometimes the liquidity in those mid cap and small cap stocks is not too much, and
Yeah.
so would that affect the tracking error or the fund
Yeah.
construction here again?
So I'll give you example on how we have curated a lot of these smart beta products, and almost so we did low vol 30 Nifty 100 low vol 30 because when you're looking for stability, you should look in large cap universe only. Multi cap low vol, perhaps from a concept point of from a मतलब वैसे अच्छा लगता है सुनने में, but if you're looking for less risk, your starting point should only be large cap, right? Because
Right.
that is where the less risk like in Europe. So we like that index a lot. In fact, I created it when I was in NSC. But the three index which we have launched Smart Beta on are sorts of, we asked NSC to create them based on our requirement. Now, first, I'll talk about momentum because there are a lot of momentum funds. Now,
Yes.
momentum, you rightly mentioned, there's significant amount of churn. In our ETF, also in products in the market, a 90% churn which is happening in the momentum over a period of year. So अगर आपके 30 स्टॉक है, आपके 20 से 25 stocks are getting excluded in an year. In fact, just look at some of the sector coverage. You'll see sectors are also changing every year, every second year, whichever is trending, right? It's a trend based investment. Now, in our ETF and in Momentum 200 ETF index also, and I'll just be unbiased and talk about every product.
Yes.
You have stocks which are forming part of FNO, are part of large and mid cap space. Only they can form the constituent of that portfolio. And I think that's a good for momentum and alpha strategy, because जितना अगर churn इतना ज़्यादा है, you need your underlying stocks to be liquid, right?
Correct.
How will you buy and sell illiquid small cap stocks और bottom mid cap stock? तो हमारे वाले में टॉप 200 में से भी जिसमें एफएनओ है, which is like 160 stocks, में से ही 30 का सिलेक्शन होता है. सेम हैपेंस विद निफ्टी 200 मोमेंटम एंड निफ्टी 100 अल्फा भी है इंडेक्स, वो सिर्फ टॉप 100 में से होता है. अगर यही आप मोमेंटम मल्टी कैप पे रन करोगे या मिड कैप पे रन करोगे, वहां पे आपको लिक्विडिटी के इश्यूज मिल सकते हैं.
Correct.
और आई थिंक देयर निफ्टी, अगर आप टॉप 300 टॉप 400 स्पेस में रन करो, बिकॉज देन illiquid stocks can become part of your portfolio. They may end up hitting circuits when you need to buy it or when you need to
Sell it. Yeah.
exit from it. And you will typically see these momentum funds or alpha funds, which are based on, which consist of small caps, which consist of lower mid caps, which consist, उसमें tracking error and tracking difference ज़्यादा रहेगा. And it
Right.
might be substantial. There are products which are having a tracking difference of 2, 3, even 5% versus the index. Now, till they are generating very good returns, like 50, 60%, people are okay with it. But
Yes.
but all I'm saying is that you need to be aware of it, and you need to take that call consciously, whether you are okay with that amount of illiquidity based underperformance which is happening. Now, so we, for momentum, we stayed in top 200, but we also wanted to launch mid cap and small cap. So what we
Right.
did there are two things. One, we expanded the portfolio from 30 stock or 50 stock to 100 stock. So mera small cap momentum quality is a 100 stock portfolio. My mid and small cap is 100 stock portfolio, because then my weight is spread out.
Yeah.
There will be issues with 3 or 4 stocks always in all the funds when it comes to small cap. But since I have 900 stock portfolio, I can easily take care of the liquidity issues. And second is that I added quality with momentum, because when it comes to small cap, people want quality filters also first. And by adding quality, which is a more sturdy, अभी जो क्वालिटी कंपनी और टिपिकली तुरंत ही नॉन क्वालिटी नहीं हो जाती है, यू आर रिड्यूसिंग द चर्न ऑल्सो,
Right.
and you are making the portfolio an all-weather portfolio. See, with large cap and larger mid cap, I'm okay with momentum, because ठीक है, लार्ज कैप स्टेबल है, बड़े मिड कैप भी उतने नहीं टूटते हैं. बट जहां पे मैं स्मॉल कैप में डील कर रहा हूँ, स्मॉल कैप इज सिक्लिकल, उसके ऊपर मैं मोमेंटम ऐड करूंगा तो वो और ज्यादा रिस्की हो जाएगा. सो
Good.
यूजिंग मोमेंटम एंड क्वालिटी बोथ इन स्मॉल कैप एंड मिड एंड स्मॉल कैप प्रोडक्ट विच वी हैव was a conscious decision. Increasing it to 100 stock was a conscious decision. Our small cap portfolio has a capping of 3%. No stock can have more than 3% weight. That was a conscious decision ki liquidity issues na ho. So we have taken steps in our products to take care of liquidity issues, to take care of tracking error and etc. And I think people should obviously, whenever they look at any smart beta product, be it be ours or kisi ka bhi, they should ask those questions ki, uh, from a method point of view, how it will change,
Yeah.
evolve, whether there'll be an issue. अभी 200 करोड़ के पोर्टफोलियो में इशू नहीं है, लेकिन 1000-2000 करोड़ के पोर्टफोलियो में इशू होगा क्या? I think those are like basic questions which people can ask.
Perfect. I think it was a good introduction for all our clients. I think we can open it up for questions if there are any. So if anybody has questions, they either you can raise the hand. There's a raise hand icon, or yeah. Okay. Yes, please. You can ask the question. Abhi, you can please ask the question. You can unmute yourself and ask the question, please. He cannot unmute. He's saying. You want he? Can you unmute him? Can you try that again, or if you can? Or if you want to just type in your question, so we'll read it. Sorry for this. Oh. Just a second. He is not able to unmute. Huh? Give us a second. Sorry. Okay. So Abhijit has put in. So his primary understanding is that the difference is between rule based and emotion based investing.
Yeah. So I
In
think,
fact,
yeah. So
so
I
how
think,
often are the rules optimized?
yeah. So I think it's not just differences rule based versus emotion based. In case of smart beta products, you get precise targeted exposure to certain factors, right? How many active fund managers can come out and say that their style of investment is only low volatility or only momentum or only quality? A lot of them always talk about blended investment, right? They take some from here, some from there. So here you are getting a more targeted approach to any style of investment. A value based portfolio in factor investing will remain a value based portfolio because there is it's completely rule based. I think I can just very quickly show you one slide if
Yes, please. Yeah.
you okay. That for example, if I'm looking at, yeah, alpha based investments, it is stocks are picked and removed based on stocks which are generating excess return over the market, which is Jensen's alpha. Just look how drastic the shift is. 2018, I think you'll remember, top 15 stocks are only doing well,
Yeah.
74% large cap. In 2021, just 40% large cap. 61% is your mid cap. Just look at the best performing sector with highest allocation in 2018. It was IT and FMCG, around 20% each. IT became almost zero very next year. Then
Yeah.
in 19 it was financial services, 20 it was healthcare, IT again. If you remember, post COVID, ek saal baad IT started doing well, 25%. Then again became zero when there was a correction due to US Fed, etc. And India mein IT is still on the lower side. So it's a very sorts of rule-based approach, targeted approach, transparent approach. And from a rules are optimized, see, what I'll say is that selection process typically doesn't change because you have a very set definition of what are value companies, what are quality companies, what is momentum, which has been followed since decades. In fact, last century में fix हो गया था. अगर आप for example value investing, कैसे Benjamin Graham की philosophy and everything came out like way early, right? So
Yeah.
that is fixed. But हाँ, but थोड़े बहुत rule tweaks होते हैं. For example, if I remember correctly, if NSE changed the rules on how they will allocate weightage to certain stocks within smart beta based on some analysis and research. So minor changes happen, Minor changes also happen in Nifty 50, अगर आपको पता हो तो. So rules are changed whenever market requires them to.
Yeah. All right. So yes. All right. Thank you. Thanks for that. I hope Abhijit. I'm sorry for the technical glitch and we couldn't unmute you, but uh, is AI making any impact on this?
So we have AI-based ETFs in US. In fact, there was one firm which came which said that they can create an AI-based portfolio for us also. But in India, I don't think it will be allowed anytime soon. So these index providers are using something called NLP, which is natural logarithmic programming, where natural language programming, where they use these softwares to go through the annual reports, press reports of companies, and based on the keywords and number of times something is mentioned, they pick out stocks to become a part of a certain theme. So that is already being used. So Lactive, one of the index provider, German index provider, is using that a lot. There are a lot of ETFs and products. In fact, we have artificial intelligence and technology fund of fund that underlying index uses this functionality. But nothing based on AI as such in India. It is there globally.
Okay. So no, so but the AI does help in creating the indexes.
Yeah. So there is an AI based product globally.
All right. All right. Okay. Uh, if uh, there are any more questions, please raise hand, and or else you can just type into the chat box and we can read. How is this different from algo trading?
That's a good question. So see, typically algo trading is using your quants, etc., to make those decisions of when to buy, when not to buy, quantum deployment, everything. AI is let's say it's using intelligence, right? It's not based on quants per se. It
Yeah.
uses multitude of factors. It interprets the data, analyzes the data, and does it. Algo, I think, is more quant based as of now. So I think future may you can see a combination of both. But if I have to distinguish it separately, algo is more quant.
Siddharth, I'd like to may add one more point here, and this, I think one of our discussions also I put up because we've seen a lot of stockbrokers use these indices to create the trading portfolios of clients because there is like regular 3 month they can churn the portfolio a lot of stockbrokers are also seeing that there are returns being generated out of these momentum. So let's say momentum का index लिया और वही stocks खरीद लिया. Now that honestly, of course, through our business, I can purely say that the biggest difference is for all our investors, we ask them to look at post-tax returns, and that is a mutual fund is a beautiful product because इसमें कितना भी churn हो, you know, client is not paying on that every 3 monthly churn, as in there's no tax impact on the portfolio. There can be an expense impact on the portfolio, but there will not be any tax impact, and the client only pays tax on while they sell the NAV. So if I'm correct to that on that point as well.
Absolutely, absolutely. So any churn changes in the portfolio does not create a tax incidence for the fund or for the investor. So that is the best reason why MF is superior to your individual stock investing versus PMS, etc. Because all of this internal shuffling does not create any capital gains incidence.
Perfect. Yeah. Yes. uh, any more question, please put it in on the chat box. Yes, please. I'm sorry, Siddharth, because I don't know we couldn't unmute, so we're using the chat box to read the
No, it's
question.
okay. It's okay. Completely understandable. It happens to the best of us.
Does time frame matter in terms of performance when comparing factor-based funds versus individual selection?
So I won't dwell into individual selection, see, because stock depends, right? And I cannot talk about stock, sorry.
Correct.
So I'll just
Yes.
talk about factors. See, time frame will definitely matter. These strategies, especially momentum, can be used in a tactical manner. You can have a very bullish view of the market. You can invest in an alpha or a momentum based product, and for next 6 month, 1 year, get very good return. I think I showed you that August ending return of alpha portfolio was 80% on a 1 year basis. So, but then you'll have to be very as you have to be very obviously conscious about the risk involved also. If you're making those tactical calls, you have to be right. But I think from a long term point of view, it's what I suggest is that you have to stay invested for one cycle. If you're talking about, let's say we're talking about alpha based investments right now, so markets are in a sideways, it is volatile. So what I'll say is that you might perhaps get returns in 3 6 months, but you should come with a horizon of at least 4 to 5 years, because then hopefully you'll see at least one or two upswings in the market, which is when typically alpha outperforms the broader benchmark. So always invest so that you are able to participate in one good cycle for a concern factor, or hopefully two good cycle for a concern factor, and then you can obviously, if you want, you can redeem, etc. सो उस टाइम फ्रेम के साथ आना चाहिए कि एटलीस्ट मैं एक साइकिल के लिए इन्वेस्टेड हूँ. इफ यू आर लकी, then you might money might be made sooner, but that should be the thought process when it comes to investment in these factor based products.
Surely the last 2.5 years have been very good for most of the investors. All right, we'll take one last question if there is any. I think Siddharth, that's it probably. Thanks a lot for your time. Thank you everybody for joining. We will use this video to probably share it on social media and on our channel. So if ever you would want to share it, please do. And if you need any further data, please feel free to contact us. We at Polo Wealth are really excited for these factor-based funds, and we look forward to um, showcasing some of these to you. So
Great.
yeah.
Thank you, Vinay.
All right.
Thank you, everyone. Bye. Take care.
Thank you. Thank you. Thank you.